have you ever noticed how your spending seems to increase alongside your income? This is called lifestyle inflation. It's a common trap that can keep you from building real wealth. As you earn more, you might feel tempted to upgrade your lifestyle, a bigger house, a fancier car, more extravagant vacations. While these things are nice, they can keep you stuck in a cycle of working to pay for a lifestyle you can't truly afford. The problem is not earning a good income. The problem is not understanding the difference between spending and building wealth. Many people work hard to earn more, only to find themselves no better off financially. They fall into the trap of equating a higher income with the freedom to spend more. This is a recipe for financial stagnation, not freedom. Breaking free from this cycle requires a shift in mindset. It demands that you recognize the difference between looking wealthy and being wealthy. True wealth isn't about keeping up with the Joneses. It's about having financial security, options, and the ability to live life on your own terms. The wealthy and the poor don't just differ in their bank accounts, they differ in their mindsets and habits. Those who struggle financially often prioritize appearances over building wealth. They finance new cars, chase the latest fashion trends, and dine at expensive restaurants, all in an attempt to project an image of success. On the other hand, those who build wealth understand that financial success is a long game. They focus on delayed gratification, investing their money wisely and living below their means. They understand that true wealth is not about showing off, it's about building a solid financial foundation for the future. This difference in mindset is crucial. It's not about depriving yourself, but about making conscious choices with your money. It's about understanding that every dollar you spend is a dollar that could be working for you, growing and building your future wealth. One of the most fundamental principles of building wealth is living below your means. This doesn't mean living a life of deprivation. It means being mindful of your spending and making conscious choices that align with your financial goals. It means resisting the urge to inflate your lifestyle with every raise or bonus. Instead of automatically increasing your spending, consider investing the difference. This could mean contributing more to your retirement account, investing in the stock market, or putting money towards a down payment on a rental property. The key is to make your money work for you, not the other way around. Living below your means requires discipline and a commitment to your financial well-being. It might mean saying no to a few impulse purchases or delaying gratification on a larger purchase. However, the long-term rewards of financial security and freedom are well worth the short-term sacrifices. To build lasting wealth, it's essential to understand the difference between assets and liabilities. Assets put money in your pocket while liabilities take money out. Those who struggle financially often accumulate liabilities, things that lose value over time, like cars, expensive clothes, and gadgets. The wealthy, however, focus on acquiring assets, things that generate income or appreciate in value. These assets could include rental properties, stocks, bonds, or even intellectual property like books or online courses. The goal is to create a situation where your assets generate enough passive income to cover your expenses, freeing you from the need to trade your time for money. Building a portfolio of income-generating assets takes time and effort. It requires research, due diligence, and a willingness to learn and adapt. However, the rewards of financial freedom and the ability to live life on your own terms are well worth the effort. Section 5, the snowball effect. Small choices, big impact. Many people underestimate the power of small financial decisions. They think that building wealth requires a large sum of money or a stroke of luck. However, the truth is that small, consistent choices made over time can have a significant impact on your financial well-being. Consider the example of a daily coffee habit. Spending $5 a day on coffee might seem insignificant, but it adds up to over $1,800 a year. Investing that money instead, even in a simple savings account, could yield significant returns over time. The same principle applies to other small expenses, like eating out, impulse purchases, or subscriptions you don't use. By making conscious choices about your everyday spending, you free up money that can be put towards your financial goals. Remember, it's not about deprivation, but about making intentional choices that align with your priorities. Section 6, the magic of compound interest. Time is your ally. Compound interest is often called the eighth wonder of the world, and for good reason. It's the process of earning interest on your principal, as well as on the accumulated interest from previous periods. In simpler terms, it's like your money is making babies, and then those babies are making babies, and so on. The longer your money compounds, the more powerful the effect becomes. This is why starting early is crucial when it comes to investing. Even small contributions made consistently over time can grow exponentially thanks to the magic of compound interest. Imagine two individuals both investing $100 per month. One starts at age 25 while the other starts at age 35. Assuming an average annual return of 7%, the individual who starts at 25 will have over twice as much money by the time they reach retirement age. This highlights the importance of starting early and harnessing the power of compound interest. Section 7. Unlocking financial freedom, the power of passive income. Imagine a life where money flows in consistently, regardless of whether you're working or not. This is the power of passive income generated from assets you own rather than from active work. It's about creating a situation where your money works for you, not the other way around. There are countless ways to generate passive income. Some popular methods include rental income. Investing in rental properties can provide a steady stream of passive income, as well as potential appreciation in property value. Dividend stocks. Some companies distribute a portion of their profits to shareholders in the form of dividends. Investing in dividend-paying stocks can provide a passive income stream. Online businesses. The internet offers numerous opportunities to generate passive income, from starting a blog or YouTube channel to creating and selling online courses or digital products. Building multiple streams of passive income is a key strategy for achieving financial freedom. It provides financial security, flexibility, and the ability to live life on your own terms. Section 8. Building wealth. Brick by brick, starting small, staying consistent. Many people get discouraged from investing because they think they need a large sum of money to get started. However, the truth is you can start building wealth with even small amounts of money. The key is to start small, stay consistent, and let the power of compound interest work its magic. Don't underestimate the power of consistency. Even if you can only invest $50 or $100 per month, the important thing is to make it a habit. Set up automatic transfers to your investment account so you're consistently putting money aside, regardless of market fluctuations or your own willpower. Remember, building wealth is a marathon, not a sprint. There will be ups and downs in the market, but the key is to stay the course, continue investing consistently, and let the power of compound interest work its magic over time. Section 9. Your journey to financial freedom, a marathon, not a sprint. Building wealth is not a get-rich-quick scheme. It's a journey that requires patience, discipline, and a commitment to making sound financial decisions. There will be challenges along the way, but the rewards of financial freedom are well worth the effort. Remember to celebrate your successes along the way, no matter how small they may seem. Each step you take towards financial freedom is a victory, whether it's paying off a credit card, increasing your savings rate, or making your first investment. Acknowledge and celebrate your progress. The path to financial freedom is unique for everyone. There is no one-size-fits-all approach. The key is to find what works for you. Stay committed to your goals and never stop learning and growing. By adopting sound financial habits, making informed decisions, and staying persistent, you can achieve your financial dreams and live a life of abundance and opportunity.